Good afternoon, everybody. I'm Tommy O'Brien, coming to you live from TFNN, 3 p.m. Eastern Time on Fed Day. And boy, we got quite a market, folks, to the downside. The market, they want rate cuts, and it seems like they might get 2 of them next year. That's up. That's down from 4 last year. And let's jump over the headline before we jump through it. The Fed lowers rates by a 1/4 point. That was all but guaranteed. But where are they going in 2025? How about just 2 cuts in 2025? That's down from 4 cuts previously. Rates are on the rise today. We got the 10-year right now. The 10-year pushing. What are we at? 4.49. I was waiting for 4.5. And we got markets reacting to negative territory right now on higher yield. We got dollar strength. And boy, this market's not stopping right now. We put it on a 5-minute. There's your drop-off. How about 100 points from where we were coming into that announcement at 2 p.m. Eastern Time? Chairman Powell still talking. We were airing his press conference live right here on TFNN. They're on a pause right now. 2 is what they're talking about, and realistically, the market is thinking maybe 1 to 2. As rates are on the rise, markets are on the decline, and we got the S&Ps off by 1.5% right now, trading at 6,036. NASDAQ 100. We are off 2.1%, 469 points, 21,850 right now. The Dow continuing the trade lower. You're talking about, what are we at now? 3, 6, 9. This would be the 10th consecutive negative day. Remember, we got a little bit of rollover in futures. Even though you get a gap there, that is not a trade higher in the market. That is just a rollover in the futures. The Dow. Today's going to be the 10th red day, and I don't think it's going to turn green after this one. Dow off 1.2%. And how about the Russell off by 2.8%? 2.8%. Now, remember, a lot of those smaller companies, they have a lot more short-term duration. So when you look at these companies, if rates are going to stay high, that could be an oversized influence on the Russell. The reason why you see the Russell reacting off by 2.9%. Bitcoin. Yeah, the ultimate growth stock, I kid, but nonetheless, Bitcoin trading lower with the market, off by 5%, $5,100 right now. We jump to yields. Let's go to the 10-year first. The 10-year right now, 4.49. There's your drop-off. You talk about it. Almost a full point from 109.29 to 108.31. And it is interesting, if you look at the 10-year, where we are right now, the lows in November, 108.30. And we just hit 108.31.5, so almost to the tick. We test that low. We're sitting at 4.5%, and rates higher than the market had expected. Now, when you got higher yield, what's that going to do to the dollar? You better believe it, man. You check out this move on the dollar. That's a move for you. More than a full point from exactly 107 at 2 p.m. Eastern Time to exactly 108. And you take a look at the dollar on a longer-term basis. Just remove that one, as we are not bumping up against, and we are. And yeah, you had a little bit of a spike high, okay, a month ago on November 18th, but this is a 2-year period, and we have a dramatic dollar strength. We came into the election with the dollar, okay, let's find the election. There it is right there, day after the election. Dollar's trading about 104. That starts the acceleration. We just overcame the high you had on November 22nd. And you got dollar strength. You got higher yields. And, yeah, we'll see where the Fed goes. And that, of course, is going to be a tough one for gold. When you got some dollar strength, you got gold weakness. Gold down $41 right now, off 1.5% at $26.20. And we jump back to the headline. So they cut by a 1/4 point. Their target range is now 4.25 to 4.5%. It was an 11-1 vote. The only dissent was Cleveland Fed President Beth Hammack voted against the action, and he said it was a close call. I was listening to some of the press conference. It was a close call. Whether they cut now, they cut. That's their 4th cut. They bring their target range down by 100 basis points, but then they're going to pause a bit, okay? And jumping around the headlines here. Is this the live one? Yes, it is. Okay, it updated on me. He thinks it's pretty clear. We've avoided a recession. Okay, now we'll see where we go. Time is going to tell if there's any lag factors, which is why they're going to be a little bit cautious. Okay. Housing activity, very low. That's largely because the Fed policy. He's talking about the influence they have had with their higher rates coming down the line. We have a long string now of inflation coming down gradually over time. We still have some work to do, though, and we need policy to remain restrictive to get that work done. Now, in terms of where they think interest rates and growth are going, okay, Policymakers see unemployment at 4.3%. They raised their forecast for economic growth to 2.1% next year, okay? But when you talk about where they think they're going to settle, they're raised that to 3% from 2.9. It's been a gradual estimate, but they are pushing that natural rate higher, and they're doing it slowly. Officials, again, raised their median estimate of where policy rates will settle over the long run, okay, to 3% from 2.9. Substantial uncertainty over the neutral rate. We all know that. There's substantial uncertainty across the board here. They're going to reduce the rate it pays lenders using its overnight reverse repo facility by 30 basis points. So they effectively lower that rate by 5 basis points relative to the Fed funds target range, aligning it with the lower bound. Nonetheless, the market says, wait a second, we're only going to get 2? We're only going to get 2 is what we're going to get. What happened to 4? No, 4 is not in play right now. They are going to be pausing to a certain degree. And what's interesting is you look at where the market, so this is the CME Fed Watch tool, okay, and what this is doing is, okay, right as it says up here, to track the probabilities of changes to the Fed rate as implied by the 30-day Fed funds futures prices, okay? And what's so interesting is that you go out to December, the market's thinking maybe 1 cut right now. 36% chance by December 10th of 2025. That's 8 meetings into the future after today. Okay? This market is listening to the Fed, and it is saying, hey, guess what? They're going to be cautious. They got 2 rate cuts penciled in, and right now the market, if it had to guess, would say it's only going to be 1. So we'll see. Rates going higher today, but what I will say is this market already knew that we weren't getting 4 cuts. Okay? That was priced in. We were not getting 4 cuts. The market knew that. The Fed has now told us we're getting 2. The market already knew that we were potentially getting 2 per the data right now. Now their next meeting, January 29th, after the new administration. Trump's going to be in there. We'll see where that goes. And that'll be an interesting one. All right. It's a great day to talk about some of this action. Coming back, folks, we got a great guest. We got Elliot Wallenbach from Direction. He's going to be talking to us about some of these markets, some of the ETFs, and some of the movers. We'll talk to Elliot when we get back. Quite a day in the markets. S&P's off 96. Stay tuned, folks. We're coming right back.
Ho, ho, ho!